Hi, this is Chuck Oliver and Davis Oliver. Welcome to the case of the week, the taxes saved case of the week. Davis, kick us off.
Yeah, this one's an exciting one, Dad. I'll go ahead and share my screen here. So, break down this client here. This is a really exciting one where they are just getting into retirement. So they've just turned on Social Security. They're 64 years old. They're out of the state of Colorado, married, filing jointly couple here. And the big thing we're helping them with in a tax plan is they have about $2 million of tax deferred IRAs, and that tax risk we want to get out ahead of. So there's going to be some great short-term tax savings today, about 330,000 in 2 years' time, as well as some really great long-term tax savings. And that, stay tuned until the end, is the really exciting piece of this case study today. So with that, we'll go ahead and break this down a little bit more here, right? The total income, as you guys can see on the tax return, like I said, very little of W-2. They're just getting into retirement. And they have the big one here, as you see here in IRA distributions on 4A, $1 million of taxable Roth conversion. So we're getting half of what they have in tax deferred in 1 year over to a Roth account to grow and compound tax free. So what did this client do, right? So where are they at? What do they do? And so the $1 million of income, that's going to leave them with a tax burden here of $332,000 and that 32.9% effective tax rate. So we did here is a great investment called Section 181A, investing in movies. And so we have some great movies we can share, whether it's Mark Wahlberg, Stallone, Scott Eastwood, Amy Adams, some great names we can invest in. But with that, this comes from IRC 181A, where most movies used to be produced in other countries, right? And so a Jobs Act was passed in 2006 by the House and Congress, and now because of this, more movies are produced in Atlanta, Georgia, than anywhere else in the world, right? So you can invest in these, get a great 4.25 to 1 tax break. So this client invested $200,000 and generated $853,000 deduction. With loss limitations, he was able to use and strategize 612,000 in the first year of top line deduction, as you see here on line 8. All right, so we're getting a big bang per buck of what we're using here, not getting rid of all tax, but substantially decreasing the tax, right? And so he's able to carry forward to the second year, and that's for this year that designed that way, so we can do more Roth conversion of the other million that remains in their tax deferred environment. So what did that deduction do here, right? So we took them from $1 million of income with a $332,000 tax burden at a 32.9% effective tax rate. And now the reported income is just beneath 400,000 at $397,000 with a tax burden of 90 grand. We took them from a 23.9% effective tax, or a decrease in 23.9% effective tax rate, from 32.9 all the way as little as single digits, 9% effective tax rate. So the first year breakdown here, you can see on that $200,000 investment with the 612 that was used, they were able to save $241,000 in taxes, and that's 120% return on their investment in the first year. But here we're not done. What's exciting is they had that 241,000 they can carry forward here in 25, and that's going to save them another $80,000 to $90,000 of tax. And total ROI is 165% of return in 2 year time. For an outlay of 200,000 into 2 awesome movies, they now have $330,000 in tax savings, being 165% return on tax year one. So we got rid of their RMD tax risk, most likely in about a 2 to 3 year time frame, with just using one strategy off the gate in a 2 year capacity. So this one's exciting. They won't have to face RMDs. We're getting out ahead of RMDs, but then again being age 64, right? And I'll pass it back to you, Dad, because there's more excitement on this case to share.
Yeah, and I think to reemphasize, and if you want to know what you can do, go to taxessave.com. That's taxessave.com. The big thing here is notice the timing of the Roth strategic Roth conversion technique, right? Not just using, from the standpoint of, well, when's the best time to Roth convert, right, Davis? We get that question a lot. It really is customized to you individually. So knowing the timing and knowing the techniques, those two are kind of like peanut butter and jelly, right? They definitely go together. So now when you look at how they got their assets, not only out of the IRS's crosshairs, but then they're also getting their income out. One thing before we transition to the long-term tax savings impact, which is over $1.3 million, we're excited for Davis to show you that, is this whole idea, right, of how they're converting, what they're converting first. So that's why marrying a tax plan and a wealth plan into one, the timing and the technique are really, really important. So Davis, show the long-term
Yeah.
impact of getting their income and their assets out of the away, we'll call it, from the IRS and out of their inheritance, because a lot of people misjudge this whole Roth conversion thing. When you Roth convert, people think you have to vest for 5 years. You have to vest the earnings for 5 years, but you can start reducing basis the very next day. And people miss that. And I think a lot of people are misinformed. So here's where we want to teach you. So, David, show the impact of the long-term tax savings, not just on their income now, but also on their assets.
Yeah, so here on the left side of the screen, people viewing here, we got 2 million of tax-deferred accounts. So this is what what the tax risk is on these required minimum distributions if they don't do any Roth conversion at all, right? So we have their age of what they'll be this year, 65 for these clients, and we give it some growth rate. Here we're showing about 8.25 of growth after fees, really taking home a net 7 for now until this kills everyone off at age 90 as far as life expectancy goes. So we also give it an assumed tax liability right about where they'd be in any of the conversions or RMDs they'll take, right around that 24% marginal tax rate. So here on the left, looking at this first, right, the tax risk they're facing, I'll give you an idea, right? Just on the RMDs that withdraw for these clients, that's going to be age, so they're born 1960, so they're right on the border there.
75,
Which,
yeah.
yep, so 75 is going to be that first RMD, right? And so here you'll see they have $1 million of RMD taxes alone, then some other potential taxes they face, and then some great large inheritance tax that we see even being the greatest of it all. All in, total tax paid from now until age 90, we're looking at about 2.6, almost $2.7 million of tax. Well, if I direct you to the right side of the screen, you'll see now we're $1 million less because we implemented, a $1 million Roth conversion and saved them substantially, about 241,000 in tax with the movie investment year one on that conversion. So that $1 million conversion, same variables as you see here from a tax rate to a growth rate. Instead of a $2.6 million tax risk under the same assumptions here, we're now down to 1.3. That's literally a $1.3 million long-term tax savings achieved here, right? So all in all, again, Dad, this one's really exciting. We get from $330,000 of tax savings on a $200,000 investment in the two movies between a 2-year time frame. And that's just the first 24 and 25 tax savings on that investment for what that conversion cost. Additionally, as you see here, the bigger impact is what it's doing in reducing RMD tax, and that's going to be over 1.3 million in RMD tax as well as the legacy tax. So we're really, doing the long term, not just the short term in this case study.
Yeah, and if you want to learn more, go to taxessave.com. That's taxessave.com. We save these case studies based on many of you asking, hey, what can we do? Some of the questions, what can I do to save tax if I'm W-2? How, as a business owner, how can I maximize my deductions? So we use different case studies every week. So be sure to follow us and go to taxessave.com. That's taxessave.com, and learn what you can be as a low tax or a no tax retiree.